Imagine waking up tomorrow, checking your bank account, and realizing your hard-earned savings are worth half of what they were yesterday. Everything you thought that was secure is crumbling before your eyes. That's not a distant possibility. It's happening right now as the dollar's power crumbles. Albeit gradually, it's expected to decline further as inflation impacts purchasing power. The US dollar, historically seen as a symbol of global financial stability, it's in trouble. Interest rates are being cut, and the Fed just told us at their last meeting that they'll continue to cut them through 2025 and into 26. If the dollar's collapse maintains its downward trajectory, everything from your savings to your investments could be in jeopardy. We're talking about your purchasing power dropping by 50% in real estate alone. And that's just the start. Without action, you risk being caught in the biggest financial shakeup of our time. But I'm gonna give you a list of what you should own when the dollar does collapse. And they're in no real particular order. And there's likely more here than you'll be willing to take on all at once. I mean, you'll have some options. But at the end, I'll give you a specific strategy of 5 things that you can do in the next 5 years to position yourself correctly to 5x your wealth. Every day that you wait, the window gets a little smaller. The decisions you make in the next 5 years could define your financial future forever. For now though, what happens when your dollars become worthless slips of paper? What can you hold in your hand that still has value? Well, number 1, gold, silver, and other precious metals. For centuries, precious metals like gold and silver have been a store of value, especially during times of political or economic instability. They're seen as safe havens. However, recent concerns about market manipulation have raised questions, but they're still a solid hedge. Number 2, foreign currencies. Consider holding strong foreign currencies. I mean, if the dollar collapses and loses its Federal Reserve currency status, you're gonna want something that's gonna step in and take its place. So consider owning the euro. It's already the second most popular reserve currency with about 20% of the world's foreign exchange reserves. It's got the backing of 20 European countries, which is pretty solid. Maybe the Japanese yen. It's sitting at number 3 right now with about 6% of global reserves. And there's a wild card, the Chinese renminbi. It's only got about 2% of global reserves right now, but China's been pushing hard to get more people using it. They're the world's second biggest economy, so you can't count them out. Number 3, foreign stocks. If the dollar drops, foreign stocks, which are priced in stronger currencies, could rise. Diversifying your portfolio internationally, that's a smart move. And remember, this isn't just about making more money. It's about protecting yourself from the inevitable collapse of the dollar. Number 4, foreign bonds. They provide stability and diversification. They can offer higher returns in a situation where the dollar's value tanks. But even bonds can't shield you from what I'm about to reveal next. I have lived through 5 Federal Reserve policy shifts, such as the dot-com crash in 2000, the 2008 financial crisis, and the 2020 rate cuts. These shifts have been both painful and opportunistic, depending on how one positions themselves. Right now, the US dollar index has dropped by 5% from its June 2024 high, signaling a weakening grip on the global economy. In the last 4 years, the median home price has skyrocketed by 50%, meaning the dollar now buys half of what it used to in real estate. Meanwhile, the stock market, the S&P 500, is up 146%, and Bitcoin, that's up a staggering 1,000%. The writing is on the wall. The dollar is losing value right under our noses. And that would bring me to number 5, Bitcoin and other cryptocurrencies. Digital currencies like Bitcoin are becoming more mainstream. Although volatile, many believe crypto could be the future of money. So owning some, that could be a smart play. Number 6, collectibles. Items like gold and silver coins, jewelry, artwork, classic cars, and firearms. They often hold intrinsic value, even when local currencies don't. Last month, the Federal Reserve cut interest rates by 0.5%, the first time that they've cut rates in 4 years. This is a huge red flag, particularly considering there's a 99.1% chance for another rate cut at their November meeting. The Fed has been shifting away from tightening policies and now is loosening the reins, which could accelerate the dollar's decline. If the value of your hard-earned money keeps dropping, what's your next move? Well, consider owning number 7, land and agricultural commodities. Like real estate, land and commodities are essential. People need food, so owning agricultural land can be one of the best moves if the dollar crashes. Bill Gates has certainly recognized this. Number 8, off-the-grid living solutions. In a severe collapse, you may need to live off the grid. So think solar-powered tools, alternative energy, water sources, and growing your own food. The Fed previously kept interest rates too low for too long, leading to these economic issues. For example, the US government is $35 trillion in debt, and inflation is causing higher prices across the board, over 20% increases in food, gas, and groceries. What do you think will happen to your savings when inflation hits even harder? Have you ever considered what your backup plan is? People and countries are already making their moves and starting to ditch the dollar and go for stuff that they can actually touch, like gold and real estate. Get this, banks bought a whopping 1,136 tons of gold in 2022 alone. That's a lot. But here's where it gets really interesting. Those BRICS countries are on a mission to ditch the dollar. China's leading the charge. They've cranked up their yuan-settled trade from about 11% to nearly 50% in just a decade. But here's where the real concern lies. The dollar used to be the king of global money reserves, sitting pretty at 73% back in 2001. Now, it's down to 58%. This is the lowest it's ever been. It's like watching a sports dynasty slowly lose its grip. It makes you wonder what the financial world's gonna look like in a few years, doesn't it? Now, out of all of these assets, there's one that could be your secret weapon if the dollar takes a dive. You want to own some. Number 9, income producing real estate. It's a physical asset that has utility. People need shelter, and it won't ever be worth zero. I mean, even if the dollar collapses, people will still need a place to live and will pay you rent with whatever currency is in use. The most important takeaway is this: without a solid plan, you're vulnerable. Don't let that be you. I'm getting together with a small group of aspiring real estate investors next week, where I'm going to provide them with startup capital, motivated seller leads, negotiation and follow-up support, and funding. If you'd like to join us, you can get the details at epicapprentice.com. Hey, have you been following this whole recession definition drama? It's like a political hot potato right now. I mean, here's the deal. Traditionally, we've always said 2 quarters of negative GDP growth means that we're in a recession, right? Well, Biden's team, they've been trying to wiggle out of that definition. For example, in 2022, our GDP actually shrank for 2 quarters straight, down 1.6% in Q1 and another 0.6% in Q2. But the White House, they're like, nah, that's not really how you define a recession. I mean, they even put out this blog post saying economists look at it differently. And then Janet Yellen, you know her? She's the Treasury Secretary. She's out there saying that she'd be amazed if anyone called this a recession because jobs are still strong. Meanwhile, most folks on the street are feeling the pinch and thinking, hey, if it walks like a duck and quacks like a duck. I mean, it's gotten so messy that the Heritage Foundation is actually suing to get their hands on some Treasury Department emails about this whole definition thing. And the people, they're not fooled either. Polls are showing that most Americans think the economy's in rough shape, no matter what they're saying in Washington. It's like we're all watching different movies. And it can't be denied that prices remain high despite claims of cooling inflation. And that's why you want to own number 10, bartering items. When cash is worthless, bartering becomes key. So you want to stock up on useful items like bourbon, bullets, matches, fishing gear, first aid supplies, and even MREs, meals ready to eat. These items will hold value in a barter economy. So there's your list. Now strap in, because we're about to dive into some seriously wild financial stuff. Here's the deal. Some people are saying we've got about 5 years to get our financial acts together before things get really messy. Why? Well, it's kind of like we're sitting on a giant money volcano that's about to blow. First off, our whole money system is built on debt, and it's piling up. I mean, we're talking about a mind-boggling $307 trillion of debt globally. And get this, for every dollar of stuff that we produce, we owe $3.36. It's like the world is living on credit cards with no limit. Now here's where it gets really interesting. Every 5 to 7 years, the economy goes through these mood swings. And every decade or two, boom, we get a financial meltdown that makes everyone's hair stand on end. Like 2008. Remember that? Fun times, right? Well, for some, it actually was. Because during these crazy times, some people get super rich, while others, not so much. After 2008, the stock market went bonkers, shooting up, like I said, 146%, and Bitcoin skyrocketed 1,000%. Meanwhile, Countries are starting to give the US dollar the side eye. They're like, hey, maybe we should use our own money instead. I mean, even the Fed has quickly changed its tune recently, cutting interest rates, moving from a tightening policy to a loosening one. So what does that mean for regular people like us? Well, the next 5 years could be our chance to either sink or swim financially. It might be time to rethink where we put our money, how much we owe, and maybe even learn some new skills to stay afloat. The bottom line, curling up in a ball in the corner is not the answer. It's time for some action, but it's not all doom and gloom. You can protect yourself and even prosper during this dollar collapse. And here's how. Step 1, bet on yourself. Before investing in any asset, invest in your own knowledge and skills. Understand the quantum wave thesis. It's a predictable technology cycle happening every 50 years or so. We are currently in the second phase where the biggest growth and wealth opportunities exist. Start by learning everything you can about these technological shifts. The reason this matters is it's the investor, not the investment, that holds the most risk. The more you know, the better you're gonna play the game. Step 2, align investments with purpose. I gave you a list already of 10 things to consider owning when the dollar collapses. But invest in industries and technologies that align with your values and the world that you want to see. Avoid industries that don't match your vision and focus on assets that will thrive in the current technological boom. Some examples are cryptocurrencies like Bitcoin, decentralized technologies, AI-powered industries, and income-producing real estate in growth markets. Step 3, leverage volatility to your advantage. Embrace market volatility as a tool rather than a risk. Bitcoin's price swings, for example, present opportunities to buy during dips. Use volatility to your advantage to grow your wealth, as markets often overcorrect due to perception versus reality. The key takeaway is volatility can be your friend. You buy during dips and ride the upward trends when others are scared. Step 4, focus on high conviction investments. Be careful not to over diversify. Instead, invest in a few high conviction assets where you have deep knowledge and confidence, like real estate, gold, cryptocurrencies, and AI companies. Those are all strong choices, but you pick for you. The reason this works is the world's most successful investors, like Warren Buffett, they focus on a select few investments that they understand deeply. Do the same. Invest in what you know. Step 5, invest in continuous learning. Allocate at least 10% of your investment into self-education. Whether it's joining mastermind groups or consuming research, continuous learning is going to help you stay ahead in the market. Stay informed about new technologies like AI and blockchain, which are shaping the whole future. Time is ticking. The collapse of the dollar, it's already happening, and the world is adjusting. Are you? Protecting your wealth means staying informed and taking action now. Whether it's gold, real estate, or cryptocurrency, make sure that you're prepared to weather the storm. You've only got 5 years to 5x your wealth, so don't miss out. And now that you know how to protect your wealth from a collapsing dollar, let me show you how the wealthy use debt and taxes to multiply their fortunes. It's something that you could incorporate in the next 5 years. So I pulled this video right here out special for you to watch next and learn the strategies that they don't want you to know. So subscribe to stay on top. Thanks for watching. I'll see you next time. Take care.